live streaming business news service. This is a show which gets you a complete wrap of all the stocks that are buzzing in trade. I'm Darshan Mehta. Let's welcome our experts then. Foram Parekh of Indiabulls Ventures and Ashwin Agarwal of Newberry Capital join me on the show. Thank you to both for joining me on the show. Today on Hot Money, we'll discuss stocks like Vedanta. Vedanta has done well. It's up almost 20% from the recent lows. There seems to be a lot of traction as far as metal stocks are concerned. So we're asking our guest whether it makes sense to actually start accumulating Vedanta at this point of time or avoid. A lot of mid-cap IT as a space we are particularly interested. After the big drop that came in KPIT yesterday, there seems to be some bit of pressure after the massive rally. So what's happening there? Any long or any short? We're asking our guest there. We're asking our guest to talk about the mid-caps, because mid-caps as such has seen a significant amount of correction. Is there any mid-cap which they believe that should be accumulated at this level? And finally, UPL is up almost 25% from the recent lows. It had corrected significantly because of the acquisition that they had planned overseas. Now, since all the details are out and people believe that it could be accretive, the counter has managed to move up. But after a 25% move, what do you do with UPL? So that's the question that we're asking. The first stock we want to talk about is Vedanta. It's up for the third day in a row. Let's see what it's doing. It was up. It's managed to inch up by 0.5% on decent volumes today. What's the way ahead for Vedanta? Is that something that our guest will find preference with? So Ashwin, I'll start with you. What's your view on Vedanta at this level?
I'm neutral to positive on Vedanta. I think it's a good company. It's like a holding company that has interest in a lot of metals, like I think zinc, copper, aluminum, and oil and gas. So most of their money they make is on zinc and oil and gas, which is Hindustan Zinc and Cairn India. So I think it's a good play on rupee depreciation. It's a good play on rising global inflation. So I think it should do well if you have a 2-year perspective.
Okay. Is there any risk that is that you have on Vedanta?
The risk would be just metal prices declining or oil prices declining. They're kind of correlated, like the commodity index declining. So I think one should keep a watch on that. But apart from that, I think the macro is quite positive going ahead for them.
Okay. Foram, do you all have active coverage on Vedanta at Indiabulls?
Yeah, so we do track this stock, and I second his opinion. We are seeing that non-ferrous metals, all the aluminum and zinc and lead, they're trading at their highs. So we do not see them correcting in the near future. And as a result, we have seen Hindustan Zinc also doing really good, and the oil prices have also, it's appreciating. So that would also benefit to their, realizations. And of course, the financials are very good. We have seen 2 quarters in a row, it's sustaining its up move. That is very important, and both on a sequential as well as on a yearly basis, it is doing really very good. So we feel it stands tall on every parameters, the product it has and the valuation it is, and the earnings is also doing really very good. Hence, I would say one should definitely buy Vedanta even at current levels.
Okay, so do you all have, if you have active coverage, do you all have an active target price on Vedanta?
Vedanta, to be honest, we have not come out with a target price on a fundamental side, but of course, with all the parameters that I have said, I think one can definitely look 15% upside, although, from here on. Of course, because nowhere in the near term we see crude settling down, to lower levels. Again, commodity prices are, quite reasonable. So, again, they have bought the electro steel business also, which would also gain tractions. So I think one can definitely see 15% upside from here on.
Okay, just a view on the metal space. Overall, as a house, what's your view on metals? Are you all bullish on it, or do you believe that, because the run-up has been there, they corrected, but overall on metals, which are the stocks that you are actively recommending to clients? We spoke about Vedanta, but are there any other stocks that you've recommended to your clients, or are there any stocks that you're telling your clients to stay away from?
No, so I don't think so. We're telling clients to stay away from the metals space. I think Hindalco is also a very good buy even at current price. And as regards with the view on the metal sector, we do not see the entire metal space coming down, because there's lots of there are lots of headwinds. We don't know about the US and the China trade wars and anything. Every other day we listen some or the other news from there. So I feel commodities would continue to remain on the upside, and as a result, we can definitely capitalize on stocks like Hindalco, Vedanta from the metal space.
Okay, so positive view coming in from Indiabulls Ventures on the metal space. Anything apart from Vedanta that you all like in the metal space, or anything that you all are avoiding?
So, Abhi, I think my favorite company in the metal space is Hindustan Zinc.
Okay.
You get an indirect exposure through Vedanta, but I guess it would be even better if you just bought Hindustan Zinc, because that's the only cash-rich company, no debt, in a rising interest rate environment, even that cash earns more. So I think I like that. And there's a company called Orient Refactories, which is like a smaller company in the refactoring business. I think that's also worth a look.
Okay, any reason for Orient? It makes consumable.
I mean, no, it's just like an asset-light model. They generate cash. It doesn't require too much investment compared to most metal companies. So it's a little less cyclical than like most companies. So
okay, so those are the counters that we spoke about. But overall, I think the trend we got on Vedanta was the fact that it's something that both of our guests like at this point of time. The next stock we want to discuss is basically the mid-cap IT space. IT as a pack has done well, beat the large cap, but the mid-cap IT stocks have rallied significantly. Now yesterday was one of the very early signs, or the first signs we saw a little bit of correction that came in. I would leave out Hexaware because of the block deal, but nevertheless yesterday KPIT managed to correct 15%. The other counters like even NIIT and all were trading rather weak in trade. So let's pull up and see. KPIT is down another 2.3% in another 2.6% in trade. NIIT is down 3%. So the big question that we're asking our guest is the rally in mid-cap IT stocks over, and we're asking them whether they like any stock in the mid-cap space, why, and if it could be a buy, it could be a sell. So we leave it open to the guest. So Foram, I'll start with you. Overall, first let's start with your view on the mid-cap IT space. The rally has been good. Will it sustain, or are you now reaching valuations which are in danger points?
I think the rally will continue to go up. It is a sustainable rally for the obvious reasons that rupee has been trading at life low levels. And yesterday we did see that US has raised interest rates, and they expect one more rate hike to be there. So this would have pressure on the rupee. As a result, I think on the constant currency basis, IT companies will continue to benefit. And as a result, one should definitely look at IT mid-cap space. Of course, yesterday was a very good opportunity, because most of the stocks in the mid-cap space corrected steeply, and we have been seeing the results. Cuban has come really very good, and among the space, there are few counters which are overvalued. But again, if we look at particular if I have to talk, Zensar Technologies, I have a buy call on Zensar Technologies because this company has finished its transformation from the traditional business to the digital space.
Okay.
And secondly, we are seeing that the market that Zensar operates in, I think the markets of America, Europe, and again South Africa. I don't think so there are any companies who would be who would be doing business in the South Africa region. So there it kind of gets a monopoly. Again, the segments that it is into, it is into manufacturing, retail, where other companies are concentrating more on the BFSI segment. We see Zensar having segments like retail and manufacturing. So I think there also it commands a little premium valuations. And if we look at the result, of course it has gone up. It's sustaining its up move. The utilization rates, if we look at the utilization, I think earlier it was something 83%. Now it's reported a utilization rate of 85%. So quarter and quarter the utilization of the employee, it's going up. So I feel that again on every parameter it is standing tall, and it has done many acquisitions in the digital space, and that is actually giving them good results. The digital space would be like almost 85% of the total revenue, and it is growing at 5 to 7%, and they want to do cannibalization from digital space to cloud computing, and we see cloud computing doing really very good. I think last quarter it was into some losses. From there the margins have gone up to like good 12 to 13% for the cloud segment. So I think Zensar Technologies and in particular has rallied significantly, and I think because of all the acquisitions and all what it has done, you still have more upside left for Zensar. As a result, one can definitely fetch more 15 to 20% in the stock.
You all have official coverage on Zensar?
No, we do not have an official coverage on it, but then of course we've been tracking. I in particular have been tracking from my previous company.
So how compared to the peers, how are the valuations? Are they on the richer side? Are they sustainable at this level?
Yeah, so if we look in the pack of mid-cap ITs, the likes of Persistence and KPIT and NIT Technologies, Zensar would be little a tad undervalued, but that could be because the return on equity Zensar has is little lower than the stocks like Persistent or KPIT has. Even on the margin side, it must be doing little lesser than the peers, and that is why probably the P stands to be less in comparison to its peers. But I think given the opportunities, the acquisition and all the parameters that we discussed, I think it has still room for more upside.
Okay. First of all, before I ask you, you have a view on Zensar?
No,
okay. So your view on mid-cap IT, have valuations been stretched now, and what do you like?
So I mean, bottom-up speaking, I guess each company would perform differently. As a whole, yeah, IT pack has done well, but that's also because they did horribly in 2017 when the rupee was strong. So there's a lot of catching up. My pick in the mid-cap IT space is this company called Excelia Kale. They do software and services for the global airline industry. It's a very asset-light business, again, ROE of 100%, margins of 35%. They recently got acquired by Warburg Pincus, which is going to merge them with another company called Mercator, which is like a Middle East-based company in the same space. So I think, and it's quite cheap. It's actually trading at like 15 times earnings and they have a good dividend yield. It trades at like a 4-5% dividend yield. So I think it's a good stock to buy.
So what's the rationale? What happens if it merges with Mercator?
So they get a lot more synergies because basically Mercator might be a partner with some airlines and these guys might be partner with others. So they could cross-sell their services and stuff like that.
Okay, and valuations you said is on the reasonable side?
Yeah, very reasonable side. It's a high dividend payout. I think it pays out like 80% of their profits as a dividend, so that's really great.
Okay, so that's the view that's coming in on the mid-cap IT space. Anything that you don't like in this space?
Not at the moment.
Okay, anything that you all are avoiding in the mid-cap IT space, which looks optically expensive in terms of valuation or the business model you don't find attractive?
No, actually, to be honest, we like all the companies, be it Persistent. Persistent has a good, return ratios and it's trading at attractive valuations. NIT Tech is also doing good. I don't think so there's any company in particular which we would want to avoid. But we, in fact, are advising clients to, accumulate the stocks, because of course rupee is expected to slide further downside, and we want, because IT is like a good bet right now when the markets are so fragile. So we are advising clients to buy or accumulate any stocks which have given good correction.
Most of the IT stock valuations are now even higher than some of the frontline IT stocks.
Yeah.
So is that not a concern that you have? That's my question.
Yeah, of course we see that TCS being such a good company is trading at just 20 times, and the rest mid-cap ITs would be trading at 25 times, which is a very high valuations. But again, as I said, most of the companies in the past, they have done their digital acquisition and they have shifted from traditional business to the digital space. So we feel that there is time to reap the benefits of what they have invested earlier. And second, if we talk about the longevity, we feel that of course the longevity factor is there. So although we might not see a steep upside of 25-30% what we have seen in the earlier rallies, but we still have an alpha of 10 to 15% to be accumulated or played on the companies.
Okay, so that's the view that's coming in on the mid-cap IT space. The stocks that we discussed, obviously the first picks are Zensar Tech that Foram spoke about, and Excelia Kale that Ashwin spoke about, but Foram is rather bullish on the entire mid-cap IT space, be it a KPIT or be it a Persistent. The next stock we want to speak about is basically mid-cap. We've kept it open. It could be a stock that could be bought, could be a stock that could be sold. But but valuations have come up significantly, prices have come up significantly for some of the mid caps. So we're asking, is there any stock that they would recommend accumulating at this level to manage to hold on for a slightly longer term perspective? Ashwin, so any mid cap that you like at this level?
Yeah, so I really like Castrol India.
Okay.
It's a lubricant company. They have great pricing power. Now obviously it's fallen because oil has risen and that's their main raw material, but I fully expect the company to start passing it over to their customers with a lag of a quarter or two. So it's fallen quite a bit. So I think again it's like a really high ROE business, 100% returns, pays out all of its earnings as dividends. So it's good cash generating company. It has a good brand. So I think that's my pick.
Okay, what's this thing with crude going up?
Yeah, so basically
that's it's managed to underperform significantly.
Yeah, so
the other lubricant company as well as the other oil companies. So with crude going up and there's no sign of it coming down, why would you still be bullish on it?
So as I said, I think crude's gone up, so obviously there's a pressure on their margins, but the company has a lot of pricing power. They can just pass on the hikes to their consumers. So for them, it's all about earning a spread between the crude and their selling price, and they can pass it on relatively without affecting their sales a lot, because it's the demand is relatively inelastic. People just need lubricants in their cars. So I think that's why, though it is a worry, I think it shouldn't dent their profitability, because I think they can pass on the increase to their customer, versus if you're in an industry when you cannot do that, then that's a real pressure.
Okay, what about you among the mid cap space, Foram?
There's one stock called as Westlife Development.
Okay.
We really like this stock, If you look at this company, it's, wholly owned subsidiary Hardcastle. It owns the McDonald's business. And Westlife in particular has been operating in the regions of the Western and the Southern India. And we see that, every other day they open, their McDonald's franchisee in the southern states. We've seen in Pondicherry and, all other places where they've been opening. And if we look at the financials, it is one of a very successful turnaround story. And if we look at it, the turnaround has been sustaining, it's not like one quarter there is a loss and then there's a profit. There are no whipsaws, there are continuous upside in the bottom line growth. Also, if we look at the, products, there are a lot of innovations that McDonald's is doing. And we can look at McCafes there, they just introduced a new product called as a rice bowl, So obviously these innovation is going to fetch them lots of tractions. Also, if we look at the same store sales growth, it is growing at 20%, on a sequential basis. Now we have seen that this has been done by earlier QSR company, that is Jubilant Food, and we have seen the kind of returns that Jubilant Food has given to the customers, But one thing I would want to highlight is Jubilant Food could, deliver such good same-store sales growth is because they cut down on their loss-making business, which Westlife Development has not done. And because they are getting more footfalls and more tractions, that is why we are seeing increase in the same-store sales growth numbers. Also, there are no debt on the books, and, look at the ROEs and all, it's doing really very good. So we have an active coverage on this stock, and we feel that the stock can definitely touch 500 levels from here. Okay. And it's a good portfolio stock, it's not like for a trading purpose. So I would say Westlife Development is a buy at current levels, and also it should be accumulated at any dips.
Okay, a couple of questions on this. First of all, will they be able to maintain this SSSG on a base which keeps on getting higher? Now SSSG in excess of 20%, so the base that will grow will be much higher.
Yeah.
So will they be able to develop that, maintain that?
Yeah, so I feel probably not, if 25%, but it should definitely go above, 20%, and that's what management is also guided. And why do management feel? It's because they have lots of things to do in this space, be it the McCafe side or the, delivery side, the home delivery side, or the, product innovation. So all these things is going to fetch them good footfalls. Again, there are so many regions that they have to penetrate into. There's so many tier 2, tier 3 cities which do not have such QSR outlets. So there they want to go in all the remotest area that they can. So they think and they strongly believe that they can definitely continue this upside in the asset.
And you're comfortable with the valuations, because
valuation is a tad little higher, but we see that there's so many positivities, and there's more room for product development, innovation. So on that factor, I would want to give a little higher valuations to the stock.
And are you considering in your official your coverage the risks because of competition and the online delivery model that has actually happened?
Yeah, so that risk is there, but then it has created a niche for itself. You look at McCafe, and the kind of products they have and the places that they want to venture into. And again, it has still not become saturated business. It's a very affordable pricing product. So we do not feel that that it's going to get saturated. It's just like normal day-to-day routine that people would just want to grab a burger and just move. So I think that the business model is obviously sustainable. They are getting into new places. So I am little comfortable with higher valuations.
Okay, so that's the view that's coming in. Castrol is something that Ashwin likes at this point of time, and Westlife is something that Foram likes at this point of time. You have any comment on Westlife?
Yeah, I just wanted to know, what is the royalty? McDonald's, do they charge a royalty to Westlife for using?
So the question he is asking you is, what's the scene with the royalty that Westlife has? How much is it? Is it supposed to increase? Is it at a constant level?
I don't think so. It would be increasing, so it's going to be at a constant level.
Okay.
Okay, so that's the view. And on Castrol, do you have a view before we move on?
No, I do not.
Okay, so that's the view that's coming in on the mid-cap picks. And the final stocks that we want to talk about is UPL. Now, UPL has rallied significantly ever since, and it had crashed because ahead of the Arista acquisition that they did, there were fears that the company probably would be overpaying as far as valuations are concerned. But once the acquisition was done, once the clarity came in and how the company over the next few years will be EPS accretive for them, the counter has managed to move up. So it's down up almost 25% from the lows that we saw. So we're asking, is UPL a good bet to bet at this point of time, or should you avoid? Shouldn't you have any view on UPL?
So I don't have an in-depth view on UPL, but I have read something about it. So basically, they acquired a company which is almost the size of UPL. I think it was some $3 billion.
Yeah.
So I think it's usually a challenge to acquire a company this big. So in my opinion, I would just wait and watch to see how the acquisition is coming along. But management seem to have bought stock and stuff in the company recently. So obviously they are bullish about the acquisition. But I would just say history is not too kind to big acquisitions. So I would just wait and watch.
Okay, so that's the view on UPL. Forum, what about UPL?
I also have a neutral view on it. I think one should wait and watch, because of course financials are really very good. On every parameter, the bottom line growth, the working capital cycle, everything is doing good. But then debt is little higher, and of course there are risks like the rupee sliding so much across the globe. So that risk is always there. And of course the stock has risen 25% in a month. So it's like a wait and watch approach. We would want to wait for a couple of quarters to see whether they are able to sustain this kind of up move or not.
Okay, so that's the view that's coming in on UPL at this point of time. It's mainly a wait and watch approach that we're seeing on UPL. But with that, we're timed out on Hot Money today at this point of time. Forum, thank you so much for coming in on the show. Thank you so much, Ashwin, for coming on the show. Ask BQ comes up next. Stay tuned to Bloomberg Quint.